Turning back to the broader market, it certainly was a rough week for those growth stocks. The Nasdaq posting its worst weekly performance since last February. Let's bring in Lisa Erickson, co-head of public markets at U.S. Bank. And Lisa, you say you have a glass half full mentality as it relates to the markets, your overweight stocks. What do you do with technology names?
Well, we're still actually positive on the tech sector and many of those longer-term secular growth names. And really the reason why is even though they've had a more recent rough run, if you just look at the tailwinds, they continue to be supported by a lot of shifts in behavior, whether it's people wanting anytime, anywhere connectivity, whether it's more flexibility and choices on how they shop and all of that kind of thing. And so they've continued to get that tailwind in addition to the fact that we're having the elongated reopening, which again will hopefully continue to sustain growth throughout 2022. So there's a number of reasons why we continue to advise people not to abandon the sector, but to hold on their positions.
So it's the case you're making is similar to the one we hear from Cathie Wood, who says it's the secular technological growth tailwinds here that will propel these stocks. Ultimately, ARK Innovation Fund lost more than 10% so far this week and is now 47% off the highs. Are these the type of names you're talking about, given that's sort of the crux of your argument?
Well, broadly, when we look at the sector environment right now, we actually see a broader opportunity set right now to be interested in within the U.S. equity market. So while we advocate that clients continue to hold on to their positions in some of those secular growth names, we actually think that some of the economically sensitive and cyclical names that you've just been talking about here on the show are interesting as well. And really, they're interesting, again, backed on the fact that companies have really managed both their top and bottom lines well. Again, they're going to be subject to continued reopening as that continues to occur throughout the year. And overall, we still, while we have some headwinds on the policy front, we still have a relatively low interest rate environment and certainly a Fed that's attuned to, some of the trade-offs with growth and inflation. So we really see a broader opportunity set in terms of the sector landscape as interesting for clients right now.